So this announcement was made yesterday by our group CEO, that's Maria, in terms of the intention to make these changes. So we know very well that the changes are going to happen in the first instance from our holding company, which at this point in time is Barclays Africa Group Limited, and that we know is going to change to ABSA Group Limited. The intention of that is the changes will happen around June. But then when I come here back to Kenya, ultimately we're going to change to ABSA. But then we are not going to rush that. As part of the agreement of the separation plans that we had with Barclays PLC, we have the right of using the name Barclays all the way to June 2020. So I think for us is, with the announcement now being out, we'll go through the normal motions. We will go and talk to our regulator, get approvals from them. Other stakeholders, like in Kenya, the Capital Markets Authority, will definitely also, get in touch with them. And lastly, will be our shareholders. Remember, Barclays Kenya is a listed, bank. And as part of this change, we definitely need to make sure that the minority shareholders also have a say to that change.
How independent is going to be this process for Kenya? We have 2.5 years now to June 2020. Are we going to see it happen sooner, or this is a decision that will be coming straight from the Africa level to Kenya and to other countries, obviously?
I think for us, what is very important is we don't want to rush in terms of making, these changes. So I think in the first instance, just make sure that from a regulatory perspective, all of that, we tick the box, including what I mentioned, the shareholders giving a nod to this. So with that out, getting all the confirmation, then it will be an issue of, us taking that decision, be it is it going to happen in 2019 or in 2020. I think the cutoff for us, we know very well, is June 2020. And for that reason, we're not going to just rush. We'll make sure that we take our time so that we take care of all the different, stakeholders.
Talk to us briefly about the strategy that Barclays has been pursuing in Kenya and whether this changes that or adds on to that, and how.
We had the first strategic period, which was 2013 up to 2017. And I know later on we'll talk to the numbers. I think the strategy we had on that was making sure that the foundation is, well bedded. And in there was a lot of investment in the systems. Be it on the side of automation, be it on the side of looking at our processes, our system, our core banking system, to make sure that the stability is there. So we've seen that, giving rise to, process efficiencies. And as a result of that, we've seen a change in behavior coming from our own customers. A significant portion of our customers now are using our alternate channels. We used to have something like around, 30% to 40% of our customers using the alternate channels. In this reporting period, 2017, 65% of these customers are now using alternate channels. And when I talk about alternate channels, they're basically not going to the branches anymore. They're using our, mobile channel. They're using our internet. They're using our ATMs as well, and points of sale. So that has created an opportunity for us using the same, the first strategic period, 2013 to 2017. So as a result of that, we've seen, we've combined some of our branches, which, makes sense. We used to have branches that were something like, 200, 300 meters apart. And as a result of that, we've basically matched those two branches. So that helps us from an efficiency perspective. And, ultimately, of course, because of the automation that I've mentioned, we've seen that we were bloated from a perspective of, FTE, and we ran a voluntary early retirement scheme. So just looking between 2017 and 2016, our headcount has come down by about 323, staff. That's about 12% of our headcount. So I must say, from a cost efficiency, that has gone very well. When I look at the side of revenue, we've done a significant, revenue diversification, be it the different segment of corporate and retail banking. And in there, we've introduced new revenue streams, things like bank assurance, risk management programs. All of these were not there before. So all of those ones have come through. So that is 2013 to 2017, a good foundation, I must say, if you look at our capital ratios, our liquidity ratios, we're in a very good space. Now, usher in the new brand, and usher in the new strategic period. From Maria's perspective, she's made it very clear. Her intention is to make sure that, we become a group that, is one of the best groups, biggest group in Africa, to be recognized, amongst our peers. So in there, we know she's come up with specific objectives, and we'll make sure that we get aligned to that.
Now, let's get to the numbers. And last year, I want you to tell me what kind of a year it was for Barclays, because we saw a drop in net profitability, also in net income. We've been talking about a disruptive political season in Kenya and the interest rates cap. I think now the government seems to understand the negative impact that it's had. But just what kind of a year was 2017 for you?
I must say quite a challenging year, and specifically when I look at Kenya. We know about, the GDP for the country came down compared to what we had in 2016. But then I think for us as an industry, the biggest impact was the long electioneering period. That really took quite some time. And as a result of that, if you look at our lending book, it was flat at the same level, 168 billion shillings. There was a wait and see kind of attitude. Quite a number of our customers, especially SMEs and the corporate customers, putting on hold some of their investments, and that had a toll on itself. When you look at the retail and business banking, segment, the biggest impact for them was actually the rate cap. So 2017, for the first time, we had a full year impact of the rate cap. And we've seen for this specific, business, retail and business banking, their revenue has actually come down by about 8% year on year. So on average, we used to have, an average yield of about 18%. And of course, with the rate cap at 14%, then it means that average has gone down by about 4%. So I must say, tough environment for us. And as a result of that, when you look at our total income, the drop year on year is about 4%. Now, when you look at retail and business banking coming down 8%, but then total revenue, drop of only 4%, it tells you that the other business, which is a corporate and investment banking, has actually come to the aid of, our financials. So on a year-by-year basis, our corporate business has done very well, with an increase in revenue of about 20%. So tough year, but then because of diversification agenda that we've been running, you see now the corporate business sort of like mitigating that impact, for the bank.